Hi, this is Jack from Alpha Charts with a state of the market video. Today is October 3rd, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, I appreciate if you would like and subscribe. Also, check me out on Twitter at Alpha Charts 365. I post there pretty much every day my thoughts and ideas. All right, let's get started. SPX, and it was a wacky day yesterday. Basically, I posted on Twitter I was going to do nothing for the first 45 minutes, an hour, because we didn't know what was actually going to happen, and there was some heavy selling in the beginning, and then there was a rebound, then it kind of sold off a little bit at the end, but not quite as bad. And as you can see, let's just zoom in here just for a second. Price on the S&P kind of trapped between the moving averages. They're both kind of flat. The 65-day is still rising, right? So that's a positive, and price is above it. It closed higher than it opened. I think that's a positive too. Again, all in all, yesterday wasn't all that bad. I mean, if you were in certain stocks, it was terrible, right? It was real bad. But the market as a whole, it did okay. And when we look at the RSP, the equal weight, you can see, this beautiful big green bar right here that buyer stepped in, which is nice to see and very, very healthy, right? So that could just mean that there's been some good rotation going on. Again, this is the equal weight S&P, the RSP. Equal weight S&P, again, still underneath the highs, but looking at this one candle, it says that people were buying, just not buying maybe the big boys. And to show that, here is a screenshot from the heat map of the S&P yesterday, and I don't remember, it was in the afternoon, I don't remember the exact time, but what does it show here? The big boys: Amazon, Google, Facebook, Microsoft, Apple, right? Even Salesforce, Cisco, Intel, Nvidia, Walmart, right? Pepsi. A lot of these big cap stocks were heavy red, very heavy red, right? But there's a lot of, under the surface, a lot of green out there. And so I think that is the takeaway message is know what you're, if you just look at the S&P, then you may be, you have to understand how it's weighted, and it can affect it, where under the surface, there may be some rotation. Remains to be seen. It's only one day, one candle, but that is something to be aware of. And again, looking at the Qs, going back to here, I mean, these were all the big tech names. Amazon is consumer discretionary, but still, it's all weighted, and it's a big part of the Qs. And you see the Qs looks much worse than S&P, this candle at least, because of that, because of the weighting. Yet under the surface, there was a lot of rebounding, some smaller high growth names. They didn't do that bad yesterday, many of those names. Just something to be aware of and watch. Again, this candle looks terrible, down 2.8%. Yet, my personal portfolio was only down, I think it was 0.8 overall. So much better than 2.8. And the point is, I don't own in my trading account any Amazon or Microsoft or Apple or Facebook or Google, because that's some of the types, I want the high octane, high growth names. That's generally where I kind of, gravitate towards. And they did okay. So yesterday was just one trading day, ugly day, but moving averages are kind of bunched up together above a rising 65-day EMA. Not terrible. And if, stimulus, good news, whatever shows up, Trump has a full recovery, whatever is the news of the day happens on Monday, good chance that we get a beautiful rebound. And this is some sort of, some kind of cup. Maybe it's a little handle, maybe not. I think that's the more likely scenario. I think that you break something like that. I think I could put a line right there, and if we break above here, I think that would be very constructive. We'll see what happens on Monday, though. I don't know. Looking at the IWM, and you can see that this was actually one of the best looking for indexes. It was great. And just going back to here, the financials overall had a great day. So that was and that's a big part of IWM. So yeah, IWM now back above the 65-day EMA. It looks like the 9-day is curling up. We have a flat to maybe rising 23-day EMA. So, constructive, nothing bad. I mean, nothing I'm a part of, but we like the participation, so that's really, really good. If we get above 159.5, I think that'd be really constructive for the market. All right, so then let's look at the financials. And again, they had a great day, up 0.79. I mean, compared to the market, right? Zooming in, it's a flat 65-day, but price did eke out just above it. So again, they're trying. Nothing I want to be a part of. And again, and I don't think that for the market to go higher, these need to outperform. Would like to see them participate, but they don't need to outperform. And I think participation is important. So they're doing their job right now. They're going to participate, it looks like. The SMH, I think they need to be going in an uptrend for the market to go higher. And it's kind of a little maybe cup and handle on here. That's a possibility, right? If we can, put in a stand right here at these moving averages, I could call that a cup and handle or double bottom, maybe even, right? Or something like that, maybe. Either way, I think SMH looks very constructive. Nothing that makes me super worried. They were down 3%, obviously on Friday, but the volume was high but in check. Nothing crazy. This could be more of an emotional move with the news of the day than really a structural move, and that's what I'm looking at right now. To me, this looks like a cup, maybe a little handle, and if we can break above 179-ish, I think that this I think we're back in our uptrend and everything looks great. Next up, we're going to talk about let's look at SPX TLT. I don't really think there's much going on there. Boom. Just get rid of some of this stuff, clean up the chart, and there we go. Yeah, SPX TLT, nothing. Short term, you could say that maybe there's lower highs, right, and lower lows, but in a longer term, it looks fine. So nothing flashing warning signs there. Let's look at lumber. I forgot to look at lumber. Lumber, very constructive here, kind of came down and now it's rotating back up. Had a great day on Friday. There's again no warning signs with lumber. It's in an uptrend. I think that's a positive. So I think that bull market rally is still intact. Looking at lumber, let's look at, we looked at SPX TLT already. Let's look at the credit spreads. So are they flashing any warning signs? I don't think so. Again, the day was bad on Friday, yet credit was under control. It's kind of in no man's land right now as far as what it wants to do, but it is definitely lower highs, right? And this could be another lower high right here. So we'd love to see it take out and make a lower low. And that would be very, very constructive. And if we can get back into, or if credit can get back under this 1.5-ish area, and just kind of vacillate between there, that would be fine. That would be absolutely fine. So I think it's still constructive credit. No warning signs, nothing that I'm terribly worried about. I think it's actually very constructive that it didn't go higher. So that's great. VIX. VIX did go up a little bit, but for as nasty as some of the market was and the volatility in the market, it didn't go up all that much. I think that's the take-home piece. And we still have lower highs. Maybe you could call this a higher lows, maybe, but that's short term, and longer term is still trending down. Now if it beats out, goes above 34, I think that's a different story. But we're not we're not there yet. It's not even above this 28, 29 level. So VIX, again, very tame, very under control. Put call ratio. We're in a bullish range, right? And that's all this is a bullish range. I mean, there's no real fear in the market, right? Not there yet. It doesn't have to be, we're in an uptrend. So that's the expectation, that we're gonna kind of be in this range going back and forth. There'll be shakeouts and scares in the market, right? And then we'll go right back and snap back and move higher and make a higher high, and then there'll be a shakeout, make a higher low, and then higher high. And that's indicative of an uptrend. That's the way it works. Let's put call ratio. Let's look at gold, because gold's kind of interesting. So we're gonna go and zoom out a little bit. And I know I've showed you this chart before, and this goes back to 2011. And we have this little area, boom, and now we're coming back around. And this would be really interesting, because if it kind of makes this right shoulder right here, I mean, that would be a massive base in gold. And it's trying to build it out. Now, this shoulder here went from 2011, went for a full year basically. So this was started, well, look at that, in August of this year, and now, so we're just starting to make this right shoulder, if that's what it is. I think that could be, it could be a year in the making. So it may not be until next summer where gold may be actionable. Again, it could be a bull flag right here too. That's a possibility, and we just shoot right up. It doesn't have to be perfectly symmetrical, even though it could be. But I think gold is really interesting, how we shot up and now we're making out this shoulder very similar, getting shot up and it kind of came back. And again, we just kind of went back and forth. Now it went lower here, but based on, this big base, I'd be looking for that next breakout as it comes up above, and then gold would be very actionable. And looking at gold, is that a place where we have rising rates? Could be. Again, I'm not a rate expert. I'm not a bond expert by no means, but bonds look like they're either in a range here, which would be the bullish scenario, but there's a lot of white space up here. And I wouldn't be shocked over the next year or so. We don't know about the election. We don't know about Fed. The Fed said that what they want to do, so it's going to hold them depressed. But again, with the election coming up and change in fiscal policy potentially at the executive branch, we could potentially see rising rates over the next year. Not something I'm terribly worried about tomorrow or next week, but something I'm watching. Again, that was the gold chart. That was really interesting. The other piece would be gold against SPX. Again, I showed you this before, and it is also making this this gigantic bottoming pattern. And we have already started building out this right shoulder, right? Again, it doesn't have to be symmetrical, but that was 2014, and we'll call that that was a 2-year, 1.5 year, 1.5 to 2 year left shoulder. And we started this in March. So I wouldn't be shocked, again, if it goes to next summer. It doesn't have to be perfectly symmetrical. Again, I'm not that kind of person that's got to be perfect. But as we come back up here, and if we start to do this, I'd be looking more for a breakout than a breakdown at that point. We'll see what happens. Again, these are much bigger, longer term ideas, but it's something that I'm going to try to revisit in these weekly videos every so often to see how these right sides are building out. So that is gold, and gold versus the SPX. Both look bottoming. Both look like gold, again, maybe next summer or ish or so, could start to be something important. And then lastly, let's look at the value line geometric index. You know, zooming in on Friday, it was okay. So breadth was good, actually. Nothing crazy going on in the value line geometric index. So that looks fine. Fear greed index, the CNN fear greed, we're at a 40. Doesn't have to go to 0 for me to say, there's nothing wrong with some fear coming in and this kind of bounce back and kind of going back and forth in this kind of range. Again, I think that's probably more healthy for a bull market, that there's some fear that pops in every so often. So nothing crazy here. So looking at the Qs, looking at put call ratio, the VIX, credit spreads, nothing's bad. Now again, if we start breaking these moving averages and we take out the 65-day EMA and we start breaking down from here, I'm going to change my thesis. But in the end, it just looks like the uptrend is still intact for now. I think that, the noise of the news and what may be happening, geopolitically or even, with the president, with having the coronavirus, as of right now, the market isn't pricing in, a worst case scenario. And so I think that's a positive. I think that right now, uptrend is, again, still intact. We will see what happens next week. This is, obviously this data is based on the close on Friday. Monday, everything can change. So stay safe, know your time frame and risk tolerance, right? That's the most important thing. And preservation of capital is job number one. So if the markets aren't doing what you want them to do, nothing wrong with taking a cash position or watch on the sidelines. There's always another setup to be had. This is not the end all be all. So anyway, y'all, take care. Have a great day. Stay safe out there.